Okay, so let me give you some orientation. We have CMA, and this is CMA Part 1 class. We have 10 lectures. 10 lectures has been divided into 4 parts. One part is for budgeting, one part is for cost accounting, one is for internal audit, and one is for performance management. Today we are going to discuss the first lecture for the performance management. We will discuss today the responsibility accounting and performance measures. Broadly, we will discuss the responsibility centers, performance measures in terms of cost, revenue, and profit centers. We'll discuss performance measure investment centers, comparing performance measures for investment centers, allocating common cost transfer pricing in terms of details and selection. In the last, we'll discuss the balance scorecard. Let me just explain you what is the momentum of the today discussion. Responsibility accounting is a recent concept in the management field, because all of us, we know that every day we are being sophisticating, getting more sophistication in terms of IT, in terms of performance, in terms of management. So these are the evolving knowledges that are being part of our discussions. What is the concept of responsibility accounting is when the organizations become large. And every organization, like let's take example of McDonald's. It was a small burger selling shop who used email. Your husband says, what I will say is absolute, right? Means centralized. But he says, okay, let me do this work and you do this work. This is decentralization. When you divide work amongst people and give them authorities, okay, home is your management and to bring money is my headache. This is allocation of the work. Same way if you have a mobile phone, for example, we have iPhone 5, right? So, okay, you bought iPhone 5, but there was some problem into, so you went to the store. Now, there could be two responses. If he says, okay, leave it here and we will give you a call in 3 days, it will go to our head office and we will let you know what happened about this. This is centralized. And they don't have any powers. They have to contact to send head office for the guidelines. But if they take immediate decisions, they replace you on the spot. Some manager comes and he says, okay, yeah, this is the problem, we'll replace them. This means that this branch has decentralized setup. They have given authorities to the managers so they can take effective decisions. Now, in terms of controllability, there are two types of cost. One is controllable cost and one is uncontrollable cost, right? Controllable cost is a cost which is in our control as managers. For example, we need 4 accountants, 5 accountants. This is in our control, right? We need 3 printers, 5 printers. We need this. We can avoid this one. That is in our control. But few things are not in our control. For example, the sales department is not performing good. This is not in the control of group CFO, right? He cannot do anything if the sales force is not doing something. And if you ask sales force, they will tell the market is not behaving good way. Back end, they have a message from the management that save cost, right? So this is, once we make someone responsible for cost, and after about 6 months, 1 year, he is showing his cost which he can control. He didn't control, right? So he will be responsible for it. This is the concept. Same like maintenance. If your AC is not working, he will try to fix it first. If it is not workable, then he will replace the part. Right? If he is a cost center. But like do and other things, they will straight away replace your unit at the spot. Because there is no concept, they will just have outsourcing. And they will change your unit, bring new unit, no matter if it's working or not working. Maybe someone will resell it in cheaper price outside. So this depends upon the controls that you have within the organization. Revenue center is you make your sales department responsible for your revenue. You tell them, look, you have to bring the money in the company, right? Because obviously any other department cannot bring finance, accounting, they are not sales oriented. Profit center is, profit is an accounting term, what means we make them responsible for sale and cost, right? For example, we have a departmental store like Spinneys, like Carrefour and others. We have different departments into, and we make each department responsible for their profit and loss. Means they will sell, electronic department will sell whatever they want, this is sales, and they have some boys to be displayed and involved in the process, some expenses, so at the end of the day profitability will be calculated each department, that will be a profit center. And then we have investment centers. What is this? It's like a branch. The office does not exist. You make a branch, you invest money, then you make a branch manager, right? And this branch manager is responsible for sales, expenses, and investments, right? So this will be an investment center. What is the management? Same as we have return on investments. Our share is going very high in the market, right? This is the balanced portfolio. So while we gauge the performance of any company, we use both criteria, like financial and non-financial. Here just two formulas, but the more emphasis of performance, how to evaluate a company performance, that will be in part two. So we'll calculate that if you invest, what is the return on investment? That is ROI, return on investment. And how it works, you have net income, you divide it with average total assets, right? Whenever average total assets comes, average means opening plus closing divided by 2. This is the formula for average inventory, average assets, average liabilities. Always keep in mind opening plus closing divided by 2. If you see quickly a question, this is asset opening and this is last year. This is last year opening, this is this year, so add, divide by 2. Right? It will give you an average return. Okay, if you talk about return on investment, it tells you what is the return on investment. For example, in this question we have 2.47. It seems that you invest in a bank which gives you very low return on investments because investment is skewed. If you invest in stocks, your return is around 7 to 9%. If you do your own business, your return will be 14 to 20%, right? If you keep around looking into the statistics of different companies and your work is to analyze companies, you will come to know this is the probabilities, right? Now, but it does not show that what is my target profit, right? It does not show what is my target profit. Suppose you have money with you and you want to invest. It has changed. And in 1 week time, you lose your customers. Because you don't have CSF, critical success factor, which makes you successful. You have to hold yourself on that one, right? So this is one thing. And for how you know what is your successful factors, it's SWOT. SWOT is strength, weaknesses, opportunities, and threats. We should know what is our strength. Like for example, you guys want to do CMA. You should know your strength means you are good in studies, you can give time, all that. Okay, what is your weakness is, for the young guys, they have a lot of girlfriends. So, for married people, they have their own issues. So things goes in other ways. These could be the weaknesses, and we have threats. Threats means today if we lose our job, for our next job we need a certification. So we should be certified. This is what is the threat. And opportunities is because in Middle East all American qualifications are fairly popular, and CMA is a really shortcut which gives you ample benefit for other qualifications later, like 7 papers of ACCAs are exempted, and if you're from India, you get ICW, that is your CMA, right? So multiple benefits are there, and some new mergers are also coming for CMA, which will be announced next month. So yeah, it will be very good for the candidates to go for it. This is what is opportunity. Okay, I will show you the balance scorecard. This is the way it looks. Financial perspective, we have to see financially the girl is very rich, same like the company is very rich. Customer perspective means how customer thinks, how people thinks about, this is very important. Internal business processes mean how the company set up their production lines, sale procedure, SOPs, manuals, internal auditing, all that. And learning and growth perspective means the employees of this company, they are given ample opportunity to groom themselves. I mean, companies, for example, attendance at internal and external training seminars, will they call companies to train the employees at in-house, or they send employees outside and give them reimbursement of the things. So this is what is, but as I told you, if you invest in employees in business process, obviously your financial perspective will be little down. So at the same time, we cannot find all these characteristics in one company because this will be more idealistic, right?